Welcome, day traders. Following a significant drop on Wall Street last Friday, the US stock futures managed to recover today, and the third quarter earnings season is in a full swing. It may increase volatility in the equity market. Asian stock markets are vulnerable to news from China about new lockdowns and restrictions. The main reason for a sell-off in the stock market is a soaring inflation. Besides, stubbornly high consumer prices may force the Fed to act more aggressively. Fears that further monetary tightening could cause a recession have intensified once again. Fed policymakers have already made a bunch of new hawkish comments. Overall, they backed new sharp rate increases. St. Louis Fed President James Bullard noted that a hotter-than-expected September inflation report justified further front-loading through larger rate hikes. Fed Governor Lisa Cook believes that inflation is too high. More interest rate increases will be necessary to make sure that inflation is firmly on the path toward the 2% goal. As inflation has not perked yet, the bearish sentiment prevails. According to the American Association of Individualist Investors, pessimism has surpassed his historical average of 30.5% for the 46th time out of the last 47 weeks. Now the indicator signals an unusually high level of pessimism. At the same time, over the last 47 weeks, optimism has remained below its historical average of 38%. The reading has been falling considerably for 7 weeks in a row, and this is why investors are likely to mainly focus on the earnings reports of banks, consumer, and industrial companies. The quarterly reports will reflect how American companies are coping with the current economic challenges. If the results turned out to be positive, it may fuel optimism on Wall Street. As the core consumer price accelerated in September and inflation expectations, according to the University of Michigan survey, rose for the first time in 7 months. The US dollar jumped by 1% last Friday. However, in today's Asian session, it retreated versus its main rivals, trading in the downward range of 112.86 and 113.22. The greenback is losing momentum as the UK may reverse parts of its tax-cutting proposals. As a result, the pound sterling climbed significantly, pushing the US dollar down to 113.04. Another reason for a decrease is that investors are revising US inflation and interest rate prospects. However, the main bullish factors for the greenback, high interest rates and rising inflation, remain relevant, so it's highly likely to rebound soon. Usually, the yen gains short-term momentum amid the Bank of Japan verbal interventions. And today, Japanese Prime Minister Fumio Kishida said that sudden moves in foreign exchange rates are undesirable. Finance Minister Shinichi Suzuki and Deputy Masato announced that Bank of Japan stands ready to decisive step to the foreign exchange market. Bank of Japan Governor Haruhiko Kuroda voiced a strong commitment to further monetary policy easing until the CPI reaches the 2% target in 2023, and the dollar-yen pair made a short-term downward reversal following the verbal intervention. However, in the Asian session, the pair was trading in the bullish corridor near the close price of the last week of 148.71. It seems that investors are assessing the possibility of another intervention by the Japanese regulator. In September, the watchdog sold US dollars and bought back the yen at the high exchange rate of 145.90. At the start of the week, the pair is trading above this threshold, moving in the intraday range of 148.37 and 148.80. It may soon approach the psychologically important level of 150. Given the divergence in the monetary policies of the Fed and the Bank of Japan, another intervention is likely to boost the yen only in the short term. The Australian dollar kicked off the new week at 0.6242. Last Friday, it depreciated against the US dollar by 1.62% amid decreased risk appetite and pessimism on Wall Street. Negative news from China on the new lockdowns and the continuing property crisis also dragged down commodity currencies. These two bearish factors affect not only the Chinese economy but also the whole Asia-Pacific region. However, today the Aussie was able to win back some of its losses amid the consolidation of the US dollar. It's trading in the upper channel over 0.6187 and 0.6253. And this week is going to be quite eventful. The UK may scrap parts of its unfunded package of tax cuts. In the United States, new earnings reports are on tap. Apart from that, several Fed members will deliver speeches. And the 20th Congress of the Communist Party will be held in China. China's GDP data is also due. On the top of that, the UK, Japan, Canada and New Zealand are going to publish their inflation figures. And that's all for now. Subscribe to our channel and stay up to date with the latest market news. See you soon.